Hey, good morning. Welcome to the morning brief. Today is Wednesday, September 17th. Yeah, from forexfactory.com, we got news. What's going on? We have some 10:30, well, we had some 8:30 news. It just came out. Building permits, which were less than normal. That's not good. When the permits go down, that means your starts will go down eventually because there will be less starts. Starts were also down, which means that finished houses as well as new houses sold will go down in the future as well. So these are both bad numbers. Housing's huge because it pours a ton of money into the local economy. The vast majority of labor on a new house is from local labor, so it's very locally based. The materials are also sometimes sourced locally, although the materials do tend to be more nationally sourced versus locally sourced. So, a big deal. Housing is a huge deal. 9:45, we got a bunch of Canadian numbers, don't care. 10:30 a.m., we have a U.S. number. It's crude oil inventories. And then we get to the gigantic amount of red here on the calendar at 2 p.m., the federal funds rate, FOMC economic projections, FOMC statement, and at 2:30, we have the FOMC press conference with Papa Powell. So what's going to happen? The Federal Reserve is going to tell us whether they're going to increase or decrease interest rates and what the projection for the economy and outlook is. The market will be watching this with extreme interest, and the market will probably gigantically move up or down depending on whether whatever Fed Chair Powell says is been expected, is priced in, etc. So the morning trading session will be very benign and very sideways up until 2 p.m. when that statement comes out. So if you're trading, be aware. You do not want to be anywhere near a open position around 2 o'clock. It is going to whipsaw. Even if you have a gigantic stop loss, you're probably still going to get hit because it's going to be an insane amount of volatility that will transpire. Moving on, looking at the daily chart. So daily, let me move this down a little bit. That just shows you where we are. We're at the very top. It looks like we're topping out here, maybe just a little bit. Got a spike high. Might be considered a blow off top, except that volume is crappy. Remember, volume is kind of crappy because we're in rollover weeks. Do not forget that this may not be a true picture of the volume going on because the volume is being spread out between the December contract and the December contract. So December and September contracts are both very active this week. At the end of the week, of course, the September contract will expire and you will only have one choice to trade, and that will be the December contract. So it's hard to say what that volume actually means since it is spread out over multiple contracts. Just looking at the chart, we're above the trend line. We're above the moving averages. We're well above the 20-day moving average. This is a concern. You can see in the past, price doesn't like to get too far away from the 20-day moving average before coming back to it. And we're pretty far away from that 20-day moving average. It's a good predictor that we will probably pull back in the next couple of days, coming back towards that 20-day moving average. I like to call that home base. Market likes to be at or near it. That being said, moving on, looking at the inventory. Inventory was decidedly negative yesterday, minus 15,000, and negative price action. That's all normal action. Nothing to worry about other than this does look like some major profit taking as people feel like the market is very overextended and the risk of the FOMC meeting today. So not surprising. We probably see a lot of people squaring their books up today, moving to the sidelines to wait till the volatility moves on. Looking at the overnight, approximately 21 overnight points. That's right on average. Nothing to write home about there. Levels, levels are crap, right? There's nothing above us. So there's no previous volume. There's no previous price action. We have no technical analysis to do above the all-time high. So all guesstimation as to where we could go. I'm not even going to give you a potential number. I could do that. 66.96, 67.21. On the downside, we have some support, but it is very minimal due to the fact we just got up here. 66.43, 66.10, 6600, 66 or 65. If we go down a little further, you can see we're starting to get into some support areas. 65.60, 65.50 are your support levels for today. Stock Trader's Almanac for today is 47.6. 47.6. We have a negative expectancy for the market today. Also from the Stock Trader's Almanac, it says, here's a note for today. It says monthly expiration week in 2001, the Dow lost 1,370 points, a 14.3% drawdown. It was the 14th worst weekly point loss ever and the 6th worst week overall. So there you have it. This day can be a wild day depending on what the Fed has done or will do. So keep your powder dry. Stay on the sidelines. That's my recommendation. Hope you have a great day. See you tomorrow. Hey, thanks for watching the Morning Brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com.